Welcome back, everyone, to another market recap. Today is November 18th, 2024. It was a Monday, and there is going to be a lot of valuable information that I'm going to share with you in this video. It is going to be one of the best and easiest ways for you to study. All you have to do is sit back, relax, and watch this video, and every single day you're going to get so much better at trading. So with that, let's talk about the markets. Now, it's not just my thoughts. It's going to be thoughts from all kinds of different people on the market today. So you're going to have a lot of diverse perspectives. And I'm going to be sharing information with you that is very, very underground and not many people know about. So with that, first I want to show you how price sought out the most obvious target in the world, which was this 4-hour fair value gap. You can see how price came down to this 4-hour fair value gap within discount of this range. So that was the first thing. And then if I turn on my new indicator, which you guys should definitely add on to your charts. I made a short form video on this not too long ago at all, but essentially this plots out the opening gaps between the close and the open of both the new week and the new day. And essentially these act as giant support and resistance levels within the market. And they also are where the market will be drawn to. You can see the market not only went to this 4-hour fair value gap, but it was being drawn to this new week opening gap here. And so zooming into the 1 hour, actually the 15-minute, if I project out the standard deviations of this move here, check this out. You can see how the 4 to 4.5 lines up with that new week opening gap as well as that 4-hour fair value gap. So the market was drawing lower towards that area. As well, there was a bearish SMT in here somewhere. Now, going on to the low time frame chart, this is where things get crazy. You have the new week opening gap, which formed this week. This was between Friday at close and Monday at open. You can see it's very, very small, but it did work. Check this out. So price comes down, pushes back up, and then as well it overlaps with this 8:30 open. So 8:30 and the new week opening gap overlap at the same area. You get SMT at the lows, which is a break-in correlation between the NASDAQ and the S&P. And then you get, first of all, there's two different ways you could have approached this. You get a close above this 1 minute fair value gap, as shown by Hydra. He did not take this trade, but he showed how you could have taken it, because he did miss it. But with that, you could see how we had this 1 minute fair value gap, and then all you have up here is unprotected highs. So when this 1 minute fair value gap got closed above, this would be an excellent place to enter. You could enter here, targeting, simply put your stop loss probably below this fair value gap, and then just like a little bit lower just to give yourself some room. And then you target this high up here and all these unprotected highs. You can see how these are low resistance as well. You have this high over here. So if you didn't catch that though, which it was not the trade that I spotted, the trade that I spotted instead was that we had these two candles which essentially act as one fair value gap on the higher time frame. This is a trick that I learned from Hydra, where you can take two candles together and they act as one fair value gap. So when you get a close above these two candles, that marks a good entry point for longs. And so you could enter here, and my stop loss is always a close below the old fair value gap, and hard stop loss is always a little lower. And then I just simply, you would target this high or this high, and you could leave runners to London's highs. And you can see that's exactly where the market wanted to go. Exactly where the market wanted to go. It shot up straight to London's highs. And yeah, if you measure out, let's see what happens if you measure out standard deviations here. Measure out standard deviations of this maybe. Yeah, you get kind of close to London's highs. You do get right at London's highs, which is very, very interesting. As well, let's talk about some advanced traders who caught very advanced versions of this move here. So, like I said, you had SMT at these lows into this new week opening gap and this 8:30 open. And I'm going to pull up a trade from this guy who is a quarterly theory trader. And you can see how some people that really know what they're doing can get insane trades off of these levels with insanely tight stop losses. Now, I'm not suggesting that we should probably be doing this, but it's just to go to show the power of, if you know what you're doing, you can make a lot of money in these markets. And so look at how tight of a stop loss he had on that trade. Now, that's not how we should be trading. We need to be taking high probability setups to unprotected highs like this, simply like this. But still, regardless, once we get better, imagine the potential of our trades, So, with that, targeting London's highs, boom, amazing 4-to-1 risk reward trade, or this other one could have been like a 2 or 3-to-1. Just depends where you put your stop loss, but very, very cool. So F3 trades, he talks about how initially he was bearish on the day, and he really thought that this was a market maker sell model. And it's very reasonable to think this. I think that it seems like common sense, but you have to see what key levels the market is reacting off of. And I think in this case here, you did have this new week opening gap that was important to note, and you had a fair value gap here, which was also important to note as well. Just being aware of how price reacts off of those levels and being able to switch your bias if needed. See how this became a lower time frame market maker buy model here. So you have to be able to switch your perspective on a moment's notice if the market gives you new information. And once the market reacts off this level like this, you could say, okay, there's a good chance we're actually going to target this buy-side liquidity pool here, these London highs and Asia's highs. And so being able to switch your bias on a moment's notice, even if you think that we're in a giant market maker sell model, is an incredibly valuable thing to be able to do. Now, yeah, you could say this is a liquidity pool, right? You have previous days low, previous week's low, and New York PM's lows. But you just have to understand, if the market gives you new information, to be able to target a different liquidity pool. And you can see here these ended up being targeted. Now, what's really, really fascinating is, T-Trades, if you don't know, T-Trades essentially put his entire strategy into an indicator. And it doesn't seem possible, but there's this really advanced coder dude, his name's T2 Degrees, and he basically collaborated with T-Trades to put his model, which is basically the CISD model that I've made videos about, into an indicator. So it plots out the changes to the delivery, it plots out your entry point, and so all of his trades are now going to be automated for us in this indicator, which I now have, which is crazy. I got this, and it costs money, I know, but I find this stuff really cool, so I actually think it's worth the money for me personally. But anyway, you can see how this was a 5-minute version of his entry model. You can see how we had a change. Now, if they're red here, that means that they could have been a setup, but they didn't end up meeting all the requirements. And if they're yellow, that means it's lower probability. Let's see if I can find a yellow one. So you want to make sure you're doing the ones that are white here. But this indicator does have alerts, and they'll tell you exactly when to enter. And so anyway, I'm going to get rid of all of our other indicators to get stuff off the charts because it's kind of a mess. Anyway, you can see here that it went to this this level. It's called the T spot, I think. And you can see that's exactly where he entered. He entered off of the T spot here. And then he targeted higher. So yeah, we had that change of state of delivery, pushed down into the T spot. That was his entry. And yeah, -1 probably lined up with London's highs if I had to guess. Yep, -1 lined up with London's highs. So this is a nice tool to be able to use. Maybe if you want to use it for bias, I think that's something I might start using it for, is just knowing if T-Trades is probably going long here, maybe my bias should be more long, but I think it's a valuable indicator to have. really briefly, let's just take a look at the stat map. I haven't looked at the stat map yet. If you don't know what the stat map is, it's essentially like statistical expected manipulation and distribution for every single candle that has ever formed, and you can also do it for sessions. And so that's the one I have. So for London session, on a bullish day, the expected manipulation goes here, the expected distribution goes here. On a bearish day, the expected manipulation goes here, the distribution goes here. So we didn't hit that manipulation level, but that distribution level was hit, and that was lined up with London's highs and Asia's highs. So like when that happens, you have to assume like, hey, maybe it's possible that we didn't go any lower is because we had that key level right. Let's see if I can pull it up. We had that key level right here, that 830 and that new week opening gap. And so the market, that was good enough for the market. It didn't need to go any lower. So now, I think that covers all the stuff that I want to talk about. But we're going to look at other people's trades. This trade. So he says he's only looking for 2 to 3 setups a week, A plus. Yeah, there's just a lot of liquidity here, a lot of unprotected highs that the market wanted to come run. And so we get a close above here. He entered off that trade from Hydro where there's 1 minute close above. And then you can see we instantly shoot up to that liquidity pool, these equal highs, as well as this low resistance liquidity. And then boom, all take profits were hit. So nice job, camel trade. You can see he entered on a 5-minute inverse for value gap targeting these unprotected highs here. However, we had that new week opening gap. The market wanted to come back and but the market did end up going and retesting that level again. Anyway, this was a good trade. It was a break-even trade for Dodgy, and this could have worked, but it didn't. So solid break-even at this high. Then it got put back break-even. He was obviously targeting these equal highs here, or maybe he was targeting a little higher. He was targeting here. Let's see if that's where he was targeting. Yeah. So that was a good trade, but unfortunately, it was a break-even. And, okay, I covered Hydra, F3, T-trades, Camel trades, Dodgy. And I covered that that one advanced trader who got that crazy RR trade. So, yeah, that just about covers it. I didn't personally see a ton else. I think this was just like the trade of the day. I mean, you have all of this liquidity here, and you have all this liquidity here, and the market just shoots up and runs all of that and goes on a giant stop run. So hopefully you find this interesting, valuable, and helps out your trading, even if it was just a little bit. So with that, I will see you guys in the next one. Bye.